Hello, I'm Angeline Ong, and this is IGTV. Welcome to your week ahead to the week starting the 27th of February 2023. First up, let's take a look at the economic calendar for you. We've got economic sentiment numbers from the eurozone and from the United States, durable goods orders and pending home sales as well. Of course, all this is interesting after those Fed minutes showed us that inflation is still on the radar of Fed officials, and that in turn might mean that rates or less aggressive rates might not come as soon as equity markets had hoped. Turning to Japan, we got retail sales numbers and industrial production as well. And from France, look out for the consumer price index there. Inflation looking like it's sort of come off the peak, but it's still really sticky, still really red hot there. Canada, fourth quarter GDP growth rate there, and from the US, wholesale inventories, the S&P Case-Shiller home data and API crude oil inventories. Now, moving on, we have also numbers from Australia in the form of the fourth quarter GDP growth rate and the NBS and Caixin manufacturing index from China. From Germany, the economic powerhouse, look out for retail sales numbers and the consumer price index. And across the Atlantic, the manufacturing PMIs and the EIA crude oil inventories on the 1st of March. Moving on to the latter half of the week, we have the consumer confidence numbers from Japan and the consumer price figures from the eurozone, and also the unemployment rate there, and followed very closely by initial jobless claims data from the United States. That's on Thursday. And then on Friday, we have details from China again, in the form of the Caixin Services PMI this time, after the manufacturing numbers earlier on the week. And from Germany, trade balance figures and the US ISM non-manufacturing data and the Baker Hughes oil rig count. Let's turn now to IG's Axel Rudolph for the biggest risk event or trading opportunity for our clients here at IG. I see you looking at the DAX of those German CPI numbers.
I am indeed, Angeline. Yes, because basically we want to see whether inflation in Germany keeps falling or whether it remains a bit sticky. Because basically that will obviously determine the forward path with regards to the European Central Bank. As of now, it is still pricing in at least one or two further rate hikes, taking the interest rate in Europe to 3.5% this year. So we'll see whether the inflation rate in Germany continues to come off and is heading back down again towards the ECB's 2% target or not. And this, from a trading perspective, could have a big impact on the DAX 40. And as we can see here on the daily chart, I've been mentioning this for the last 2 weeks, actually. We've seen a negative divergence, meaning that the latest highs we saw on the DAX 40 chart with regards to its prices in February were not mirrored by the relative strength index, which was showing a series of lower highs. And when you've got this negative divergence, then the odds are pretty high that you can see at least a short-term reversal in the trend. And this is what we've seen so far. We haven't made a new high above this daily financial bet here on the chart at 15,656, but instead have traded in a sideways range. And perhaps next week, with regards to the CPI data in Germany, we could see a fall through this support area, which has been holding up the DAX 40 for the last 3 weeks, between 15,272 and 15,245. Basically, if we were to fall through these levels, then it's quite likely that the DAX 40 would be heading back down again towards the mid-January to late January lows between 14,992 and 904. So these are really key levels for the medium-term trend with regards to the DAX 40. So we're basically between a rock and a hard place. If we were to rise above the high seen at 15,656 recently at the beginning of the month, then further upside is likely. However, if we were to fall back towards this 14,900 area I've just mentioned and fall through it, further downside is likely in store.
Great stuff. Stay with us. We're going to look at corporate news now because there is a huge amount out as well from the corporate front, starting with some consumer names. First of all, ABF on Monday with its first half trading statement. Zoom Video Communications fourth quarter earnings. Interesting to see how the working from home trend or hybrid working is working out for that company. Occidental Petroleum also out with Q4 earnings. Then on Tuesday, we go on to Ocado's full year earnings in keeping with that consumer sentiment trend. Bayer full year earnings there, and HP first quarter earnings. On Wednesday, that momentum does not slow down. In fact, it picks up with Persimmon out with full year earnings. That is the UK house builder. Interesting to see what it says about the outlook for the housing market, because of course it's looking quite weak at the moment, both from a demand and a supply point of view. Reckitt Benckiser out with full year numbers. Just Eat Takeaway, that's full year earnings out from that company. And Dollar Tree out of the US, which is kind of like the Poundland of the UK, also out with earnings. Then on Thursday, we have ITV, LSE, Broadcom, and Costco Wholesale out with numbers as well. And we end the week with numbers from Deutsche Lufthansa, its full year earnings there. Key, given that we have had strong indicators from IAG, from many of the other airlines, that travel is indeed back. However, we're going to look at the consumer side of things with Axel, because we've had the Nestle's, the Unilevers coming out with results recently showing that the consumer is still robust despite inflation, despite the uncertainty. But that, would it change? Is it changing? Let's take a look at what the technical signals are telling us.
Well, we'll have
Axel?
to see, really. I mean, as you say, Angeline, with regards to Ocado, for example, we have full year earnings out on Tuesday. Now, Ocado missed its estimates and had profit warnings 4 times last year. And astute investors actually sold their Ocado shares ahead of earnings. And we'll have to see whether this time around this is also a good way to trade or not. Because basically, if you look back to last month, for example, Ocado also said that there was a weak update with regards to its joint venture with Marks and Spencer in the UK. And at the same time, the earnings on Tuesday might give its board the opportunity to talk about Ocado Solutions. That is the technology arm of Ocado, which really makes up most of its where Ocado wants to be heading towards. Because basically, if you look at the daily chart, you can see here, going back to October of last year, we had this huge rally in the Ocado share price in November. And that was on the back of Ocado signing a contract with the retail arm of South Korea's Lotte Group. And basically, Ocado wants to roll out more and more of its technology capabilities with regards to warehouses and the delivery of foodstuffs going forward. So we'll have to see what the guidance on that will be on Tuesday. But from a technical perspective, we're really at critical levels at the moment, because we are holding above the psychological 600 pence mark and have only just this week made a low at 605 pence, as you can see here on the daily financial bet. And basically that low has held since late November of last year. You can see here we've got this horizontal line in. So if earnings were to disappoint, we would probably be falling through that 600 pence area, which would then likely take us back down again towards the 500 pence zone or so, where we were trading back in late October of last year, or perhaps even lower than that. And we can see that long term, we are still in a downtrend with regards to the Ocado share price. And there are still some hedge funds out there who are still short the stock. And for the bulls to be back in control, what we really want to see is positive earnings, or a positive guidance at least, taking us back up towards this downtrend line, towards the 680 to 700 pence mark, in which case we could then perhaps rally back towards the 200-day simply moving average here in red on this daily financial bet chart around the 712 pence mark. But earnings will be key for this chart next week with regards to Ocado.
Thanks very much, Axel. As you rightly said, when you mentioned investment, that's going to be a key thing too. So not only the earnings and how well they do, but whether or not the investment in tech, which has weighed on its results of late and its outlook, whether that will soon transform itself into future profits. Thank you very much. This is IGTV's Angeline Ong, and that is your week ahead. Have a good weekend. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.